Hi, this is Phil Senderowitz, Managing Director of Strategic Retirement Partners Central Florida office. The number one question we've been getting from our retirement plan participants over the past several weeks is, what should I do to prepare my portfolio for the upcoming election? Today we're going to share some ideas with you that will hopefully help you make better decisions in the coming weeks rather than poor decisions. The first thing to realize is that the market doesn't care whether you like the president or not. Believe it or not, markets have had better returns when the presidential approval ratings are mediocre or poor rather than when everybody loves the president. So knowing that with the upcoming election, we should really not necessarily focus on whether the market is going to be happy with the new president. Elections are a political event, and market returns are based on economic policy, interest rates, and earnings. All three of those, not political events. Now, granted, elections may cause some short-term volatility, but long-term returns are going to be based on investment fundamentals. Depending on how long you have for retirement will factor a huge amount into whether you should make any changes. If you're more than 10 years away from retirement, looking at the day-to-day movements of the market are probably not going to be overly beneficial. One of the most popular sayings that we have is, it's time in the market, not timing the market. And target date funds are really managed to account for various bouts of volatility. So if you're more than 10 years away from retirement, probably leaving things alone is the best course of action. If you're closer than 10 years away from retirement, it might be a good time to reevaluate your overall risk tolerances and take stock of where you have your money overall. Earlier this year, we had a really good gut check with the markets being down almost 30% in a very short period of time. So look at that as your guide and say, hey, you know what? I couldn't sleep at night with my account down so much so quickly. You've essentially gotten a get-out-of-jail-free card by having the markets rebound so quickly, and your account values are probably above where they were if you left everything alone in early March. So if you were having trouble sleeping, if you were uncomfortable with the amount of risk in your portfolio back in March, now is a perfect time to reevaluate your portfolio and maybe take some risk off of the table. But if you weren't tossing and turning in March and trusted that the markets would rebound, taking action in advance of this upcoming election probably isn't the best idea. If you have any further questions or want to talk to someone individually, drop us a line at plantoday@srpretire.com and we'll be happy to help.